Welcome to Solidarity Spotlight, the place where we share with you bleeding-edge stories in blockchain development. I'm your host, Solidarity. As we begin the second half of 2025, the cryptocurrency landscape continues to evolve rapidly, with several significant developments taking place just today. Trading platforms are expanding their offerings, while regulatory frameworks advance and security concerns persist amid substantial capital inflows. The shadow of quantum computing looms over the horizon as Bitcoin maintains its six-figure valuation after a record-breaking month. Today marks a significant milestone for Sogni AI, as its Sogni cryptocurrency officially begins trading across multiple platforms. Starting at 12 UTC, MEX Exchange became the first to list the token, with Gake Exchange also joining the roster and offering a special hodler airdrop promotion, where users holding at least 1 GT can share in over 5 million Sogni tokens. This AI-driven cryptocurrency has generated substantial interest among traders and investors worldwide, enhancing liquidity and market presence. The accessibility of Sogni through major exchanges could potentially drive broader adoption of AI-integrated blockchain solutions and might influence investor sentiment towards similar technological integrations across the crypto ecosystem. Simultaneously, Echo Protocol has marked its entry into Binance Alpha, with trading scheduled to commence today. This development represents a meaningful advancement for both entities, as Echo Protocol gains increased visibility and Binance Alpha continues its commitment to supporting innovative projects. The listing holds particular significance given Echo Protocol's focus on enhancing cross-chain DeFi mechanisms that allow Bitcoin holders to generate yield. This strategic positioning could potentially redirect Bitcoin staking flows and liquidity by unlocking new yield avenues. Market analysts anticipate tangible changes in transactional volumes similar to previous Binance Alpha listings, with special attention to how Echo's Bitcoin-focused DeFi solutions might impact broader technological ecosystems. Bitcoin itself currently faces a critical support test, having slipped below the $105,000 threshold due to intensified profit-taking. This development has raised concerns about a potential drop to the psychological $100,000 level. Despite this short-term pressure, Bitcoin recently achieved its highest monthly close ever at over $107,000 in June, marking 3 consecutive record months in 2025 above 6 figures. Historical analysis suggests a promising outlook for July, as the month has consistently been strong for U.S. equities, which Bitcoin tends to follow. In 7 of the past 10 Julys, Bitcoin has posted positive returns, averaging around 9%, with even negative performances remaining in single digits. This seasonal trend creates a favorable backdrop for potential upward movement. Technical analysts note that the weekly candle closed at 108,380 on Coinbase, just below the final major weekly resistance at 108,890, suggesting that Bitcoin will need to reclaim this level as support to invalidate a possible developing lower high resistance pattern. Meanwhile, XRP has been consolidating between $2.35, with market participants closely monitoring potential ETF approvals that analysts project with 95% probability for 2025. The U.S. Securities and Exchange Commission is reportedly exploring a streamlined listing structure for crypto exchange-traded funds that could accelerate the approval process. Under the proposed approach, ETF issuers might bypass the traditional 19B for application submissions, instead submitting SEC Form S1, with automatic approval following after 75 days without objections. This regulatory simplification could dramatically reshape market dynamics across multiple cryptocurrencies, particularly benefiting established assets with strong institutional interest. On the institutional front, Deutsche Bank has announced plans to launch a crypto custody service in 2026, collaborating with Bitpanda's technology unit and Swiss provider Taurus. This represents the bank's latest attempt to enter the digital asset storage market, initially announced in 2020. As one of Germany's largest financial institutions makes this move, it signals growing confidence in cryptocurrency's long-term viability within traditional banking frameworks and could accelerate enterprise adoption globally. The legislative landscape continues to evolve as well. In late May, the House Financial Services Committee and House Agriculture Committee unveiled the Digital Asset Market Clarity Clarity Act, establishing clear, functional requirements for digital asset market participants, prioritizing consumer protection while fostering innovation. The bill divides oversight between the Securities and Exchange Commission and the Commodity Futures Trading Commission. HFSC Chair French Hill aims to pass this legislation, along with stablecoin legislation, before Congress departs for its August recess. Unlike previous cryptocurrency regulatory efforts, the Clarity Act has garnered some bipartisan support, with 3 Democratic original co-sponsors. This regulatory clarity could provide a more stable foundation for institutional participation and potentially reduce market volatility associated with regulatory uncertainty. Despite growing institutional interest, security remains a significant concern. According to Certic's Hacked report, hackers stole more than $2.47 billion worth of cryptocurrency in the first half of 2025, already exceeding last year's total of $2.42 billion. The majority of these losses stemmed from 2 major incidents, the Bybit breach and the Cetus protocol exploit, which together accounted for $1.78 billion. Wallet compromises were the primary attack vector, contributing to $1.7 billion in losses, while phishing resulted in $410 million stolen across 132 incidents. The Ethereum blockchain was most targeted, with $1.5 billion stolen across 164 incidents, followed by Bitcoin with $373 million across 10 incidents. These security challenges underscore the ongoing need for enhanced security measures across the cryptocurrency ecosystem and could drive increased investment in blockchain security solutions. On a more positive note, the cryptocurrency startup ecosystem experienced a notable surge in investment activity during June, with blockchain and Web3 startups collectively raising $1.15 billion across 140 deals. This represents a 3% increase in total capital raised compared to May 2025, and a 9% improvement in the number of deals. Standout funding rounds included Cowshi's $185 million raise at a $2 billion valuation, Digital Assets' $135 million strategic funding for its Canton network, and World Liberty Finance's $100 million private token distribution for its USD $1 pegged stablecoin. The increased deal count suggests renewed investor engagement with the crypto startup ecosystem, with hybrid financing models combining traditional equity with token distributions becoming the norm. Looking forward, several cryptocurrencies appear positioned for potential all-time highs in July 2025. Among these, Syrup, the native token of Maple Finance, stands out after reaching a new all-time high in June, following a breakout above a falling channel. Strong buying pressure, as indicated by the Chaikin money flow, remaining above the zero signal line, suggests bulls remain in control. If this trend continues, Syrup's price could potentially break $0.66 and approach the $1 mark. However, a long-term existential threat looms on the horizon. In May 2025, BlackRock added quantum computing as a critical risk warning to their Bitcoin ETF filing, cautioning that quantum advances could undermine the viability of cryptographic algorithms used not just in Bitcoin, but across the entire global tech stack. Researchers warn that 4 million Bitcoin, roughly 25% of all usable BTC, could be vulnerable once quantum computers advance sufficiently to break their encryption. Experts predict that Q-Day, when quantum computers will be able to crack current cryptographic standards, could arrive within the next 5 to 7 years, possibly sooner. This technological challenge could necessitate significant protocol upgrades across the cryptocurrency ecosystem, with researchers at the University of Kent suggesting that upgrading to post-quantum crypto systems could require 75 days of downtime for Bitcoin. Industry leaders are increasingly recognizing this threat, with some already proposing emergency solutions, like Ethereum co-founder Vitalik Buterin's suggestion for hard fork solutions when quantum computers eventually crack Ethereum accounts. That concludes today's Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more Spotlights. See you next time.